Welcome to our episode of the Global Investors Podcast. I'm your host, Charles Crillo. Today we have Ed Mathews. He's a seasoned real estate investor and the founder of Clark Street Capital, a real estate investment company with a focus on multifamily properties. Ed has over 25 years of Silicon Valley experience, culminating in his transition to full-time real estate investing in 2018. Today, his firm aims to empower professionals toward financial freedom through passive investments. So Ed, thank you so much for being on the show today.
My pleasure, Charles. Nice to see you.
So you have a really interesting background. You came over to real estate about 10 years ago full time, but you were in Silicon Valley for 25 years. Can you give us a little background on yourself, both personally and professionally, prior to going full time with Clark Street?
Yeah. Husband, dad of two girls. I spent 24, just over 24 years slinging software and services for whole bunch of companies you've never heard of and a couple that you might have, and loved every minute of it. But frankly, the 150 plus nights a year that I was traveling, throughout the US and in some cases throughout the world, when we started having kids, I came it very quickly became apparent that I was missing a lot of good stuff at home. And so I can't say that the real estate portfolio was my grand plan to escape corporate America. It was just something that I did on the side because I realized pretty early on that working a W-2 was not going to get me to where I wanted to be retirement-wise. And I had no intention of working 45 plus years to make a retirement work, only to find out I didn't have enough cash. So the other part of it was that, frankly, my wife's family, she comes from good stock and pretty good chance just genetically she's going to outlive me by 15 or 20 years. And I don't want her to run out of money either. So, cash flowing properties was one of the primary ways that I solved that problem, so that our girls don't have to take care of her in her elder age.
Definitely. So tell us how kind of you cracked into getting in real estate. What was your first real estate investment? What were you doing? What was that kind of strategy?
Yeah. So I was working for a company called Ariba. It's now part of SAP. And basically I had always wanted to build houses, as a kid. That was something like, if I could grow up and build houses, that would be wonderful. And, then college and I got jobs and life took over. And so, I read Rich Dad, Poor Dad, like a lot of people, in 2008. It took me about 3 years to ratchet up the courage to finally pull the trigger on a deal. And quick funny story. So I had met, when I moved back to Connecticut from Boston, the Boston area, I met this broker who was just starting out. Her name's Amy Rio, and she had, 4 or 5 agents at that point. And why, I don't know, but she, showed me a couple of dozen houses and properties for me to buy. And so I was interested in flipping or buying a small multi at that point. And I came up with every reason in the book, right? Oh, it's got a red door. Oh, it needs a roof. Oh, the 25 windows are fine, but that 26 one's going to be a problem. No. And bottom line is I was terrified. And so we were in the parking lot of a property on Clark Street in East Hartford, Connecticut. And it was a 4-family for $99,000. And Amy, God bless her. She was standing there. And so I'm like 6'4" plus, right? And she might be 5'2". So I'm like more than a foot taller than this person, right? And I started, as we were walking out the door, I started with my excuses. Oh, it's a white building. White buildings are a pain in the neck. Whatever excuses I could come up with, just dumb stuff. And she very quietly listened to me. And as I'm talking, she pulls out a piece of paper and a pen, puts it on the hood of my truck, and she goes, "Stop." And I was like, all right, mid-sentence. Okay. She goes, "Look, I've shown you 20, 25 different properties. All of them were good deals. This is the best deal of them all. If you don't buy this, I'm going to. So here's the pen." She handed it to me and said, "Sign the effing," although she didn't say effing, "sign the effing contract and let's get on with this. Buy this building." And at that very moment, I was more afraid of Amy than I was of making a commitment to buy a piece of real estate. And I gingerly took the pen and signed the contract. And up until about 8 months ago, I owned that property, and it cash flowed pretty much a little bit of rehab work. So 3-4 months after we acquired it, it was cash flow positive every single day I owned it until April of last year.
Oh, fantastic. Yeah, it's kind of that little kick in the pants to get you going, right?
I
the little
desperately
motivation.
needed it. And now Amy is a gigantic brokerage, and, she's probably one of the bigger ones, if not the biggest in Connecticut. So wherever, every once in a while she'll return my phone calls. So she's kind of a big deal now. So that's good.
Oh, that's great. So from being 24 plus years in Silicon Valley, I mean, what did you take away from working with startups to bringing to, investing in real estate, which seem completely different, but there must be some overlap there. I mean, what did you bring? What were those lessons that probably transitioned with you?
Great question. So day one, I ran this as if it were a $10 million business, and it was just me, right? And so, we had systems in place. We started to put technology in place, kept it super simple. But, if I was working through a process, just the way my head was wired, I would document that process and either find a way to automate it or at least make it replicatable so that, when we did hire, we could, I could hand that to somebody else. And then, so that was the first big thing. The lesson I didn't learn was to use other people's money. I used my capital, and it was fine. I mean, we did very well, but we didn't go anywhere near as fast as we could have. We lost out on a lot of opportunities because I didn't have the capital to take them down. And so, so lesson learned there. But overall, we're very systems oriented here. And so that's a huge piece of, I would submit, our success and, our ability to weather downturns and pandemics and all the other things is that, we're a well-run company. So we don't really have a lot of waste when it comes to time or capital. So that was big.
Yeah, that's the other muscle I found. So when I got and started after I graduated college, my dad pushed me to buy like a 3-family. Did for my brother, did for me. And when we bought it, that was like the first kick in the pants. And the second one, many years later, was taking investor money. And that needed a whole nother muscle of risk that had to be grown because it's a whole different, even if you've been successful, you know what I mean? It's a lot taking money. And, those first couple rounds are friends and family, just like it would be, like within... these are people you're sitting across from Thanksgiving with, you know what I mean? It's difficult to take that money.
Literally my mom's money, literally my uncle's money, right? Literally my money. My kids now have money in one of our funds. I mean, it's something I take very seriously. So, it's also, from a capital raise perspective, it makes it a lot easier for me to look somebody in the eye and say, this is something that we're a steward of your capital, and A, we're going to take good care of it, and B, we're going to grow it. And I'm so sure my money's in there, my family's money's in there, my mother's money's in there. And, that usually, at least it's one step in the process of evaluating if we're a good fit, right?
Yeah. It shows the alignment of interest, you know what I mean, that you have with that firm. And when I see people that don't have that, it's always a red flag. And I don't know what the perfect percentage is. Is it 20% of what you're raising? Is it 10? Is it 25? But there's some sort of thing where it just shows you that there's a serious, investment, not just on time, but also financially with this operator.
Yeah, I think it depends on the deal, and obviously the operator, right? It's $10,000 is a lot of money. $50,000 is a lot of money, and $100,000 is a lot of money. It all depends on your current situation and your perspective, but I think if you put $1 in, it shows commitment. And obviously we do a lot more than that, but the fact is that. That is a key reason why we do it, is to put our money where our mouths are, right?
So Ed, tell us a little bit about kind of what your overview of your company and your current investing strategy and criteria for investing is now.
Yeah, so you're catching us at an interesting time because it's evolving as we speak. So time was, we bought value-added C-class buildings here in Connecticut and Vermont. I used to jokingly tell people we buy crappy apartment buildings from landlords who aren't very good at their jobs. And, we would go in, make them clean and safe as phase one, and start rebuilding the relationships with the residents that want to stay and we want to keep. From there, we would upgrade all the common areas, interior and exteriors, to show them that there's a new sheriff in town. We actually care. And then, the third piece would, as units come open, we would go in and completely rehab them. Brand new kitchens, brand new bathrooms, flooring, paint, lighting, you name it, new everything. And, as those new units came up, that's when we would start raising rents to, market. The other folks, we just stuck to the 3%, 4%, 5%, depending on the market, and where they were relative to it. I'm not in the home making people homeless business. So, we try really hard to find a good blend between raising rents with the newly updated units and kind of being a human being on the ones that are still occupied by folks. But, we'll go in, and if the light switch doesn't work, we'll fix it. And if the plumbing leaks, we'll replace it and fix it. And, so they, and also we give them the opportunity as new units come open. If they want to move into one of the new units, they get right of first refusal.
Nice.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carrillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com.
How does your firm handle property management? Do you keep it in-house, or do you you do it all in-house?
We do it in-house locally. We are looking at markets outside of Connecticut, which point I'll partner with another property management company. So we're looking for properties in North Carolina and Indiana in particular. Those are the two markets we're focusing on these days. And we've created relationships with local property managers to get their insights into the market as to what neighborhoods meet our profile. That change that I was alluding to earlier is that we've been in the process of selling off everything under 10 units and using that capital to fund our growth into much larger deals. And also, we just launched a debt fund as well. So to help other investors, locally only. So we're only focused on lending in Connecticut. And with investors that we have longstanding relationships with, so that we know that they're vetted and they know what they're doing. So the company is really changing and evolving right now as we speak.
So, when you're investing in Connecticut, I was owned property in Connecticut from 2006 to 2022 and self-managed 2006 to 2012. My property's there in New Britain, and it was something that I live down, in the south of Florida right now. So it's one of those things where it's a difficult place. It's a more tenant-friendly environment, let's just say. How were you able to, negotiate? C-class is a tough asset class to own. You know what I mean? How were you doing it where you're working with tenants? How did you guys go through COVID? How did you manage that whole process in a place where they turned off evictions for over a year?
Yeah. So in the history of the company, we've only had 2 evictions. And I know that's an anomaly. Not to say we haven't done cash for keys or, other things, but let people out of their leases and so on, when it's not working. But so COVID was interesting. Actually, let me take a step back. So it's really hard to rent from us. And so I'm looking for good, hardworking people who do what they say they're going to do and pay their rent. The relationship is very simple. We're going to provide a clean, safe, well-appointed building that you can be proud to live in or raise your family in. You're going to pay your rent. That's the relationship, right? And so, yeah, we're very clear about that up front. It's a huge piece of the orientation that we take our new residents through. And the fact is that, we're pretty rigid in terms of what we have as far as criteria. And so the folks that we're bringing in, are usually just hardworking people that, they're the folks that crank a wrench on your car or pour your coffee in the morning or cash you out at Target or Walmart, right? They probably have more than one job. And, so I respect the heck out of them. And it's, I think that they know that respect exists because we treat them like customers. It's if something breaks, they call us, we fix it. If there's a question, there's a human being on the other end 24/7 to be able to answer that question. Yeah. And, the answers are yes, ma'am. Yes, sir. Thank you. It's our pleasure to serve you. And, we take that very seriously because, first and foremost, I grew up in those places, right? So, my mom and my dad worked their butts off to keep my brother and I in sandwiches and spaghetti and all the other things that, clothes and Calpro sneakers and all that stuff. And so I know how hard those people work. And, part of our model is that we give them that respect. The folks that we inherit, most of them are great. And, but there are certainly times where, they don't like, the new sheriff in town, and our rules are our rules, and they're very reasonable. Don't make a lot of noise at night when your neighbors are trying to sleep. Park your car in the place you're supposed to park your car. Don't leave your garbage out. I mean, it's simple stuff, right? And but we're diligent about it too. So if there's a problem, then you're going to get to meet me or a member of our team, and we're gonna make sure that you understand that everybody has a right to enjoy the quiet, have the quiet enjoyment of their home. And we take that extremely seriously. And a lot of, and not a lot, occasionally people are like, yeah, that's not a good fit for me. And they either self-select out, or we encourage them out, or in a couple of cases, we have to evict them. But so COVID for us, it was a challenge, right? I mean, there were certainly folks, we had a handful of 3 or 4 at the time, residents who went into the bunker, and, we couldn't get a hold of them. And obviously I can't go knocking on doors because it's COVID. And, we finally got through them and said, look, I'm never, and it came to, in a couple of cases, it came to me knocking on the door and standing 6 feet away and just saying, look, I am not going to make you homeless in the middle of a pandemic. That's never going to happen. But you got to talk to me. We got to work this out. And so, it starts with, okay, tell me what your situation is. And then it's, okay, how can I help you solve that situation? So, a lot of the folks that live in our places are work in the hospitality industry. And so until their bosses figured out how to do takeout, there was no job. And so we had a few of those folks, and it came down to us because Connecticut is actually a tenant-friendly state. There was a lot of programs that the state put in place very quickly, and I'm not making this political at all, but they did a good job in a lot of respects. I have my complaints as well, but we don't have to go into those. But there were a lot of programs that actually helped folks that were left high and dry from their workplace. And so I was able, we were able to connect them with those programs, and slowly but surely those things got resolved. In a couple of cases, we said, okay, look, you're going to be 90 days out before you start working again. This is what we're going to do. We're going to take the 90 days. We're going to put it on the back end, and the other part of it is, we're going to figure out how to keep you in there. But, let's just move forward, because, the thing is that the people that were late, their track record was they were never late, right? This wasn't like a habitual thing. This wasn't, I went to the casinos on Friday night and I lost my rent, and hey, sorry, this was, I lost my job. I need to feed my family, and the world is stopped. What would you like me to do? And my answer was, just talk to me. Let's figure it out. And so we tried to be human beings about it, and by and large, it all worked out. Knock on, fortunately. So, I think it comes primarily down to the fact that we pick. We are hard to rent from, and the folks that rent from us are really good people. So,
yeah, that's definitely one thing I preach on the show is the tenant screening, and you've just shown that it can be very successful when done correctly. You know what I mean?
Yeah, it probably saved our bacon.
Yeah, so that's great to hear. One of the things I found when I would self-manage properties, it was like, we'd have like a thing, it would be like, pay your rent on time, respect your neighbors, respect the property, and we're golden. You know what I mean? It's a 3-step process to living here. And you break it down, and for the most part, I've had very minimal property problems when in that sense. And then when I speak to some landlords that had like horror stories, like terrible horror stories, you're also thinking, on the other hand, it's not just a tenant. Like, what did you do to this? You know what I mean? How are you managing these properties? You know what I mean? Like, it's just, you have to, it's especially with C-class. I mean, it's a give and take type thing. It's not like you're renting new A-class with like super credit tenants. You know what I mean? You're talking to people that, like you said, you know what I mean, that are working paycheck to paycheck. And sometimes there's a hiccup and you need to work with those people, or you're going to have like consistent evictions, consistent vacancies, and you're just going to be like ripping through people.
Right. Yep. Exactly right.
You mentioned before about utilizing technology. How do you utilize technology when you're using it to assist with managing properties effectively?
Yeah. So handful of tools. So our back office is actually in the Philippines. So we have our property managers, our bookkeeper, our SEO and technology folks all live in the Philippines. And we actually, even have a digital agency to help other investors do that. Because, it was working, and my buddies were like, how do you do that? And I'll gladly show you how to do it. And they didn't want to manage it. They just wanted to consume it. So we created an agency. So a lot of what we do is based on technology. So we use Slack to manage our communications and all of our documents. So all of our leases and client communications that are hard copy and everything else in between is all in Slack, so that it's accessible globally 24/7. We use ClickUp to manage our projects, and that's integrated with Slack. So everybody knows exactly where we are with every single project, and who owns it, and who owns the next step, and all that, as well as timelines and budgets and all that. We use a tool called Hemlane to manage our properties. And the reason that I like that tool is they provide, AppFolio does the same thing now, I believe. But Hemlane provides a 24/7 US-based help desk. And so for residents. So if there's a 2 a.m., my toilet is leaking phone call, Hemlane gets it. They're trained to triage what we call tier 1 problems, things that can probably be solved over the phone. And anything that is an emergency, blood, flood, or fire, I get a phone call on my cell phone, which, is super rare, but it does happen. And, and the other stuff gets put into our work, our work breakdown that gets consumed the following morning. And, we've got handymen that work for us that will go out and figure out what's going on, and the stuff that requires a license, we call our plumbers and electricians and HVAC folks.
Yeah, systems in place, and that makes it really streamlined. It's great that a lot of that stuff, you're having process in place where a lot of the simple tasks that we would see as simple as a property manager are being taken care of initially. And then you're just like, what's making it through the funnel is just like you said.
Yeah, we manage exceptions, which is great. It makes, my hair would be a lot grayer if we didn't. Right.
So do you utilize, you mentioned before utilizing digital marketing. Do you utilize it to find real estate investments as well? Or are you mainly finding your properties through brokers?
I have found my properties through brokers. We do a lot of direct mail. There are, last count, which was last quarter, 1,208 properties in the state of Connecticut that someday I'd like to own. And so we do quite a bit of outreach, whether it's email, which is a huge chunk of it, as well as direct mail, networking. I'm active in all the larger meetups and at least the ones that have investors, and as opposed to folks that want to get into the business, which I also do, but not as much anymore. We have 2 or 3 really trusted brokers that we work with. I have 3, 4 wholesalers that we tend to work with, but that's happening less and less because those folks typically are handling buildings below 10 units, and we're looking for above. So a lot of stuff we find is off market, whether it be through email or direct mail, postcards and letters.
So with having a tight kind of tenant screening policy, you're probably going through a lot more tenants being thrown into the top of that funnel before it comes out. What are some of the best channels you've used for locating tenants for properties?
So we have one platform, and I don't even know how many channels because it's a lot. So Hemlane will syndicate across all the major rental platforms. So apartments.com and Zillow and Realtor and all the more obscure ones. I think there's at least a dozen, there may be even more. And so we find that is a great way to find our residents. The other thing, and it's interesting, it kind of happened over time, is that our buildings get reputations within neighborhoods as being well run. And so, I know usually, I'd say a huge majority of our new residents, whether they find out about us from a friend or from a broker or an agent, usually live within 1.5 miles or 2 miles of the building that is, that we own. And so in many cases, we have, we have referral programs. So if a friend of yours who lives down the block would like to move into one of our properties, we'll pay you $250 the day they move in. That works really well. So, and then, we already have a good tenant and we get a good tenant's friend. And, in a lot of cases, they turn out to be really good people too. So it's that's a good thing as well.
It's definitely a win-win.
Yeah.
For new real estate investors or investors looking to kind of grow their current portfolio, what would you suggest are like the first key hires they should make?
Hire a bookkeeper. You got to know your numbers.
Yeah.
Day one.
Yeah.
Or as soon as possible. I'm an operations guy, but I'm not a bookkeeper, right? And that's not an ego thing. That is, I suck at it, right? I mean, it's not something in my wheelhouse. I don't have the patience for it. I enjoy the numbers and I like going through the numbers that our finance, our accounting folks give me, but me creating that, it's just not my expertise. And so I'd rather hire somebody that really knows what they're doing. And, in our case, it's somebody who's overseas and, it's a very reasonable price. But even in the early stages, when we had a bookkeeper based here in the US, I was using her 10 to 20 hours a week. I mean, max. And even if you're paying him or her $25, $30, $40 an hour, 10 hours, and I misspoke, not 10 hours a week, 10 hours a month. $400 to make sure your books are clean is easy money, right? And so that is the first hire I would make. The second hire I would make is an executive assistant to make your life simple. Go through the emails. I mean, gosh, I get hundreds of emails a day from people that want to sell me stuff and, want to put me on a list to speak or want to, whatever. Right. And so probably 10 or 15 of those emails are the ones that I really need to pay attention to. And so, my assistant Janice is, she's phenomenal. She's been with us for 6, almost 7 years now. And she's basically part of my family at this point. But the fact is that she returns my phone calls. She manages my schedule. She cleans up my emails. She kicks me in the pants when I don't get something done that I said I would get done. And a lot of other stuff as well. So that's a huge help. I think the third person for multifamily folks I would hire is someone to be the overall property manager, someone to catch those calls and manage the relationships with the residents. Because, the fact is that as you get bigger, once you get past, 10, 15 units, you're going to be busy. And so it's part of our strategy is being super responsive to our residents. And, if I'm running around hair on fire trying to get other deals done or meeting with investors or stopping by a construction project to make sure we're on time and on budget, and the guys showed up and, everybody's doing what they said they would do, I don't have time to return phone calls. So that's something that's really important. And it's also important when on the, first 10 days of the month when rent's due, if folks are using their grace period, which we're fine with, and it's day 8 of a 10-day grace period, having someone call and say, hey, just want to make sure we're on track for the 10th. And, having that diligence behind the scenes is really helpful for cash flow. So those are the first 3 I would hire. I mean, there are lots of other hires I would make, but those are the big 3.
Yeah, that's great. Yeah, the bookkeeper for anything, no matter, even if you're not in real estate, if you have any type of business, it was a game changer when I got that off. I despise bookkeeping. And it's also, if it's not done correctly and you try to save like $4 here or there, and you pay $150 an hour to your accountant to clean those books up, it's actually just better just to get a good bookkeeper that knows what they're doing, and you can just like dump everything. You know what I mean?
Yeah, because I'm that guy, right? I screwed up and, not too bad, but my books were not clean when I handed them over to my accountant after the first year, and he's like, ooh. And he cleaned them up, and he was great, and said, you need a bookkeeper. And I need a bookkeeper. You're right. And so, so we literally month 12, day 1 after that, I was on the hunt for a bookkeeper.
Yeah, those first 3 hires are great. I love the idea of bringing on the person just for property management as you grow, because there's so many moving parts. We talked a lot about talking to tenants, but knowing the condition of the properties, working with contractors to get things fixed, keeping a list of stuff that's maybe not really emergency, but needs to be taken care of in the next 2 weeks or whatever it is. You need to have this list to get that done when people go to that property. And these are all the things we used to do. And it was very time consuming, and you do everything kind of halfway when you're not doing it completely. So that's what I found as well.
Yeah. And that tends to tick residents off, and then they move. And, a huge piece of our business model and the reason we're really profitable is because residents stay with us, right? And so we don't have to pay for year over year turnovers of, marketing those properties and all the other stuff that goes into turning over a unit. Our average is just over 4 years, and that's more than double what the average is in the state of Connecticut. So
that's great. Yeah. And when you can minimize that turnover is when you really make money in multifamily, as I found over the years.
Yep. 100%.
So for over all the decades of your business experience, Silicon Valley, real estate full-time, what kind of mistakes do you think multifamily real estate investors make after being in this business full-time since 2018?
So the span of time between like 2019 and 2022 made everybody think they were geniuses. And a lot of them are, but some of them aren't. And the big problems I've seen are pretty simple to solve. The first one that I've seen is a lot of people got over leveraged. They went in and the no money down kind of deals that they were looking for, even if they were borrowing from private investors and then going to the bank, for private investors for the first 20, 25%, and then turning around and borrowing from the banks for the other, 75%. They got in a lot of trouble because everybody wants to get paid. And, if you start missing payments, knock, 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 you get in hot water very quickly. And so I would say that the reason that people that can weather pretty much any storm only leverage 50 to 65% of their create 50 to 65% of leverage for their buildings. In that case, you can survive anything, right? Usually. And so I highly recommend that if you are looking to get in and you don't have the capital, find equity partners, not loan partners, right? And find that 30 to 35, maybe 40, 50% if you're lucky, and then go to the banks with the rest to create your capital stack, however you want to do that. I think that's where I've seen a lot of people get in trouble. Moody's a couple of years ago said that 22, 23% of the commercial loans that were in various bank portfolios could not be, once repricing happened, they could not be refinanced because people were underwater. And that was a huge piece of it, right? The other thing that I don't see a lot of people do, which confuses me, is they don't source their variable costs every year. Insurance, electricity, right? Here in the state of Connecticut, you have the ability to source the source of your electricity. There's delivery and then there's generation, right? And, the difference between Eversource and one of the secondary providers is huge potentially for, definitely across a portfolio, but even building to building, you maybe feel like you're saving pennies, but over the course of several buildings, that is something that's, a huge opportunity. We source our garbage every year. We put everything out to bid every year. And, a huge piece of my Silicon Valley career was procurement, contract management, and sourcing. So I learned how to do all this stuff, but, that's just simple. It's just simple. It's good business practice, right? And what else? The other part of it, I guess, is to stay on top of maintenance, because a dripping faucet becomes a gushing pipe way faster than you expect. And so, it's easier to fix the $100 faucet than it is to fix the, $1,000 worth of water damage because it leaked into the apartment below.
No, that's a lot of great things. Water is one of it's just like, don't mess with water.
Blood, or fire, right? Yeah, exactly.
Man, it comes from the top, it comes from your pipes, wherever it's coming from. I mean, it can just decimate and it can cost, and it's difficult to pinpoint too. So anyway. But Ed, thank you so much for coming on today. How can our listeners learn more about you and Clark Street Capital?
Yeah, so the easiest way is to go to our website, clarkst.com. That's CLARKST.com. I'm Ed at clarkst.com. And we are Clark Street Capital on all the major social platforms. We're pretty easy to find.
All right. Well, thank you so much for coming on today, Ed. We'll put all those links into the show notes, and looking forward to connecting with you here in the near future.
Sounds good. Thanks, Charles.
Thank you.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.